Hello, everybody. Welcome back to the AltFi Digital Summit. We've got a fantastic next session to kick things off. We're being joined by Romi Savova, CEO and founder of PensionBee. Romi is a former banker for Morgan Stanley and Goldman Sachs. Hello, Romi.
Hi, how are you?
Good. How are you? How's things? Where are you?
Good. I'm sitting in the office. It's a pretty quiet time.
Oh, wow. Crikey. Excellent. Good. Well, we're kicking off most of our discussions really just to sort of gauge how you as a senior leader in FinTech might be able to advise any budding entrepreneurs or business leaders really as to how to I guess operate in this sort of unprecedented time, and perhaps any sort of lessons that you've learned in the relatively short period.
Sure. I mean, I think in some ways there's never been a more opportunistic time for digital businesses to come to the forefront, because either you're digital right now or you're not really in operation. And so from that standpoint, I think that there is actually a lot of opportunity, because we have to rapidly replace sort of the physical things that we're used to doing with online services. And I think that that's a really, really important trend that's probably going to last for a long period of time. At the same time, it's a really brave time to potentially be starting a business, because it does feel like things are changing. Perhaps the capital markets are not as open as they previously were. And so I think, definitely some opportunities, definitely opportunities for the right ideas, but certainly also a couple of challenges that people will need to think through and sort of decide if it's the right step for them. I think from our standpoint, like most other fintechs, the transition to remote working was pretty seamless. We are an essential service though, and so we do maintain a small team in the office, and it's allowed us to keep on with our business operations in a fairly uninterrupted way. So would I have necessarily done it all like this voluntarily? No, but I think it's turned out for the best.
And has it changed anything, as a sort of a leader? Is there any sort of difference in, in how you approach that?
Well, I think, the fundamentals haven't really changed, and the fundamentals around being there for your team, showing compassion when things are getting, a little bit stressful, really understanding what your team is thinking about and what's worrying them, and trying to keep the communication lines as open as possible. I think from that standpoint, nothing has changed. I think the method that we employ to do it is a bit different, because we do have to do a lot of things on screen. But the fundamentals are always the same and always have been the same.
Really interesting. I should say for anyone familiar with PensionBee, obviously we've got people tuning in from around the world, from as far away as Sydney, I believe. You offer, I guess, low-cost ETF-based pension portfolios, but also account aggregation, or sorry, I should say, sort of pension aggregation for legacy pensions. So it's a fairly straightforward proposition, but clearly there's a long way the pensions industry, I'm sure globally, but particularly here in the UK, can go to sort of digitize. Before we sort of jump into some of those longer term trends, I really wanted to just ask about sort of customer acquisition strategy. So I think you guys have done very well, in the past few years about acquiring customers. But has that completely changed now that that you can't sort of do tube ads or that sort of thing? Or perhaps is it now easier to reach people because everyone is a lot more engaged digitally?
So all of that is true. And I think for us, the key has been approaching our customer acquisition in a really diversified way. So we've been very focused on digital channels, but also non-digital channels. And we've certainly done our fair share of outdoor advertising, which of course is much more difficult during coronavirus because you simply don't have footfall. But then again, I think that that's created a lot of other opportunities, like opportunities in TV advertising, where people are much more, focused on the news that's coming out. And so while certain things may wane, other things come more to the forefront. And ultimately, the question is less about which channel you're using and more about what you are offering and whether it remains relevant in the time of coronavirus. And I think for us in particular, coronavirus has really been a time where people have done a lot of financial spring cleaning, if you will. And we've certainly seen upticks in all of our core metrics, but also some, prudent behavior when it comes to pension withdrawals. So our service, as you alluded to, we offer the full life range of pension services because we're an online pension provider. And so consolidation and combining your pensions into one new online plan is on sort of the list of to-dos that people have and could be there for months. But during coronavirus, I think a lot of people have found the time to really sort things out. So I think, definitely a different sort of environment in terms of acquiring customers. But if you keep on offering something that people need, and you're approaching your customers knowing what that is, then I think that those challenges, are fairly surmountable.
I suppose lots of people anticipated some sort of crash or correction after such a long bull market. Was that something that you guys had been preparing for? And I mean, I'm sure you weren't preparing for the coronavirus, but was it something that you always anticipated as being a sort of a crunch time that was looming? I guess the first, particularly considering your product is very much the stock market, of sorts. So, was that something that you'd always anticipated? And has it been sort of easier or harder than you thought it would be?
So we've always anticipated market ups and market downs. I think, business cycles are fairly routine and predictable things over a long period. I was at Goldman Sachs in 2008, and I very, very distinctly remember how everything happened in a almost minute by minute fashion from the moment that we started having worries about Bear Stearns, and then obviously following the collapse of Lehman, and so I actually recognized fairly early on when coronavirus started becoming more and more prominent in the news headlines exactly what was coming, and although you never expect the exact thing that will hit the market, you do know that eventually one day it will be something, it will be different to the last time, because otherwise it would be too easy. And so the lessons from 2008, I think, were very, very well learned. And so when PensionBee, when we started designing it as a proposition for our customers, one of the most important things was that we would only work with some of the world's largest asset managers. And so our money is managed by BlackRock and State Street and Legal & General. And we sort of say, well, if you want to manage money that's in PensionBee pensions, you need to be on the 1 trillion mark or above, because we know it's really important for there to be that confidence around, people's pensions. These are really, really long-term investments. And if there's one thing we learned in the last financial crisis, it's that big is important when it comes to savings. So that was certainly one decision that we made from the very outset. And then over the years, as we have started, as we have grown as a business, we've thought really, really hard about the types of plans that we want to introduce, because market volatility for someone in their 20s or 30s is not necessarily something that they should be concerned about when it comes to a pension, because that horizon is so long and it doesn't need to be accessed, and it can't be accessed until the age of 55. However, our customer base has also been transitioning, and we are increasingly acquiring slightly older customers, many of whom are, approaching the point of drawdown or have started drawing down. And so for them, it's really important that there is an offering that doesn't expose them to the same level of market volatility as what may be appropriate for a 20 or 30-year-old. And so a couple of years ago, we started introducing plans that would really help protect those customers who are nearing their withdrawal commencement, whether that's our tailored plan that sort of de-risks as you grow older, or whether it's our preserve plan, which is very, very low risk. And in fact, our customers who had chosen the preserve plan actually experienced no market volatility. And so, these are important decisions that you need to make way in advance, because you can't time the market.
Absolutely. So obviously lots to cover, and I can see some questions coming in from the audience, but something that we talked a bit about yesterday, and I'm sure we'll talk more about throughout the day. We've obviously got Anne Bowden from Starling Bank and Zach Parrott from Plaid. So the open API economy has very much come to finance and is expressed in PSD2 and open banking. How relevant is that to pensions? I know it's something we talked about a bit about before, but is that something that long term will be a driver of further disruption to pensions?
Absolutely. I mean, I think open finance is in its very, very early stages, because for the most part, I don't even think that open banking has reached its full potential yet. But certainly within pensions, we were the first provider to start integrating within open banking apps, because there is something really powerful about being able to see your bank balance next to your pension balance and knowing that this is today's money and this is tomorrow's money, and they're both really, really important. So there's definitely that power there around bringing information to consumers. I think the really, really difficult part about pensions relative to open banking is that there are so many different pension providers. So within the universe, there's around 40,000. And by the universe, I mean the UK. So there's 40,000 potential places where your pension could be. And I think that has made it much more challenging to open up the pensions data in the same way that we have opened up the banking data. However, our own analysis shows that within sort of the top pension companies, you can find about 80% of the pension data. And so open finance within pensions will require additional legislation and regulation in the form of data sharing requirements that come from the FCA. But I don't think we're quite there yet. And a lot of the focus within the sector has actually been on the pension dashboard, which sounds a little bit like open finance, but is actually a pension finder service that can be used online.
Very interesting. Just before we move to questions from the audience, I'm really, really keen to hear what you think about what sort of the coronavirus period will mean for M&A and FinTech. Obviously, you guys, I think, have raised money in the past, and perhaps will in the future. But do you sort of anticipate that we're likely to see a greater wave of M&A sort of happening? And do you think this could be quite a sort of choppy period for valuations, perhaps as well? We obviously saw today press reports that Monzo's next round would be 40% lower. I don't know, definitely if that's the case or not. But do you anticipate a sort of a broad sort of disruption, if you like, for FinTech in the coming years?
Well, I think that sort of rumor around disruption and acquisitions and mergers has been on the horizon for a long time. I mean, I think you have to think about the supply and demand trends when it comes to that. And I think certainly, you know, on the fintech side, it probably will be more challenging to raise capital if you are a business that doesn't have a clear path yet towards profitability. So I do think that will become more challenging because risk appetite will of course be lower in an era where people are experiencing, and by people I mean investors are experiencing disruptions within their existing portfolio. So I think that's a fairly natural tendency. I think on the potential buyer side, though, I certainly don't think that, you know, many of the big businesses have been immune to coronavirus, or that, you know, they're seeing, that they have suddenly found themselves in a position to be incredibly acquisitive. And in fact, you know, we've also equally seen reports that some of the larger companies are looking to offload, you know, past acquisitions that they've made. And so I think that there probably will be a couple of opportunistic, you know, points that come across in the cycle, but, you know, generally M&A tends to thrive when markets are rising, rather than, you know, when there's economic uncertainty ahead.
And, you know, would you sort of ever consider or even rule out, you know, acquiring other fintechs, you know, either direct competitors or complementary businesses?
Well, I think, you know, we're very, very focused on pensions, and we love building and we love creating. And one of the things that's made us incredibly special is the culture that we've built within PensionBee, and the way that that culture, you know, really, really helps us to drive the business forward and has helped us to stay as cohesive as we possibly can without being able to see each other on a daily basis. And so, you know, the challenges with M&A have always been around integration. And, you know, from our standpoint, we feel that we are really, really well equipped to keep creating, and we love our culture. So I certainly think that we would be incredibly cautious about anything that would have the potential to disrupt that in any way. That being said, you know, never say never. And I think that, like any business, we have obligations to consider opportunities as and when they present themselves to us.
Interesting. You know, I think it's fairly obvious to say, as an asset manager, or at least a conduit asset manager, you're sort of earning money from day one in terms of, you know, revenues come from assets under management. What is the long-term plan though for PensionBee? You know, do you want to be a listed company? Is it a stock market listing eventually that you know, really is really that sort of long-term goal?
Well, I think it's certainly a very attractive option for any business, really. I think being a listed company is it's a privileged position within our marketplace, isn't it? And so I think it's a very, you know, it's a very intriguing and compelling potential future development for the company. I think that, you know, there are certainly things that we admire about listed companies and the way that they can often help their customers and can create confidence within their business. So I think, you know, again, something that we certainly wouldn't rule out. I think that for us, though, the real focus is on growing the company as much as we possibly can, because pensions is just so vast. And within the UK alone, you know, in our segment that we focus on, defined contribution, there's about £1 trillion of people's pensions that, for the most part, are not being taken care of in a way that is beneficial for consumers. And so for us, the real priority is to help as many consumers and as many people as we possibly can. And then the corporate structure of the company, I think, is something that, you know, doesn't drive our strategy. It's sort of a nice complement to a strategy that you might have.
Okay, very interesting. We've got 10 minutes left, Romi, so let's jump to some questions. So Niall Bella Barber asked about legislation similar to PSD2 sort of for the pensions universe. We obviously already covered that really, but he's asked sort of, if that would happen, when might it happen? When, but, so maybe perhaps just, have a think about that one. But also, James Mukherjee asks, does PensionBee do the groundwork to find users' previous pensions? Or is it up to the customer to supply that information to PensionBee?
Okay, so why don't I take those in reverse order? So in terms of our service, our customers can sign up in just a couple of minutes. And actually, we have lots of people who, join PensionBee when they have an hour's worth of free time or even 5 minutes worth of free time on their lunch break. And so the information that we need in order to get going is really a little bit about who you are and a little bit about your old pensions. So if you have the name of your pension provider, then that's usually more than enough. If you have the name of your old employer, we have a proprietary database that we can check and see if we have had a previous match with an employer and provider. And if you have all of your pension details to hand because you finally opened the drawer that you keep your old envelopes in, then that's fine too. But generally speaking, we take as much as you're able to give on the spot, and we advise you kind of throughout the journey if we need more information or not. When it comes to PSD2-like regulations within pensions, I think the first thing on the agenda is really the pension dashboard, which, as I alluded to earlier, is an online pension finder service. And some of the legislation for that service is already making its way through the government. But as you might imagine, there is a lot of focus on coronavirus at the moment. And so the pensions bill is not necessarily progressing as quickly as anyone in the pensions industry would like. However, it's certainly not the end game, because as it stands now, the data that would be shared with the pensions dashboard is probably going to be quite limited to start with. So while you might be able to type in your name and national insurance number and be shown the pensions that you have, I think it's even still an open question if you would see the balance of those pensions or other kinds of important information like your fund performance or your charges that you might want to know.
Very interesting. Question here from Ajit Barak. Do you see partnerships or mergers in the digital pension providers space?
Do we see partnerships or mergers?
I guess, yeah. I was going to say, I think it's sort of saying, is there sort of the potential for partnerships and mergers?
Well, I certainly think there's potential for partnerships always. I mean, we've always been a big fan of partnerships, and we have, a couple of really sort of, public and very wonderful partnerships with some of our fellow FinTechs, Starling Bank being one of them and Yolt being another. So, definitely lots of opportunity for partnerships, because I think within FinTech, we often see the world and how we approach it and our natural skill sets in a similar way, which is really, really different to the way that, some of the more legacy companies might think about things. So lots of opportunity for partnerships. I think in terms of mergers, I think that has always been, loosely on the horizon. I think, there's nothing special about FinTech mergers. I think it would have to make sense within the context of that particular deal. And, you can't always make it work.
Okay, very interesting. Couple of questions, I guess, all around sort of ESG. I think you recently launched a new portfolio offering that was, I think, fossil free. Are you seeing a lot of demand for that? Is it, is that a sort of a trend that that we can count on not falling by the wayside, owing to coronavirus?
I mean, ESG as a trend is definitely growing and will continue to grow. I think in the very initial phases, the most important and most public discourse around ESG was really on the E, which is around the environment. And I think increasingly, though, we are turning to more social aspects of corporate behavior, and how do companies treat their employees and treat the wider society and their supply chains. And then, eventually we'll probably get to the G part as well, although the UK Corporate Governance Code, I think, has laid out, what good governance looks like already. So, I think definitely this is an area of focus because it very much reflects what society wants. I think that society expects businesses to conduct themselves in a way that is conducive to having a better environment and in a way that progresses our society, and in a way that reflects good governance. So it's a social expectation, and therefore I do expect it to become a cornerstone of investing expectation. And certainly when we surveyed our customers, and we've done quite a lot of work on this recently, people expect their money to be managed in a way that is consistent with their values. And I think the asset management sector is only now starting to respond to that demand, because previously decisions have very much been driven by sort of, mathematical calculations only. And while mathematical calculations are exceptionally important, they're not necessarily the only thing that's required for long-term prosperity when it comes to investments. So from our standpoint, we introduced the Future World Plan, which is our plan with Legal & General that pledges to aid in the transition to a greener economy. But actually, over the past year, we've discovered that our customers want even more, especially when it comes to the environmental side of things, which is why, again, together with Legal & General, we've pledged to launch the Fossil Fuel Free Plan, and it will be launching this year. So definitely we like to be led by our customers, and we like to be led by customer demand. And so if we see the demand going there and it fits with the way that we view the world, then it's very much, it is very much on our roadmap.
Romi, there's two questions I'd really like to sort of blend into one. Ultimately, have you noticed, sort of zooming out and just looking across the sort of financial and sort of fintech spectrum, are there any sort of breakthrough technologies that you've really noticed coming to the fore in this period? And secondly, do you sort of feel there will be substantial lasting impact for the fintech sector? Perhaps just in terms of working patterns, or in terms of I don't know, new technologies or new ways of doing things?
I think for me, really, this period has solidified trends that were already there, whether that's from digitization and the increasing comfort that consumers are finding using digital services to do literally anything and everything, whether it's about, sort of, I guess, the evolution of our privacy system and how data will be shared going forward in many ways to protect the public good while still protecting the individual. I think that debate is probably about to become much more important. But overall, I feel that this has been coming. It just happened much quicker than anyone expected.
Okay, fantastic answer. And I think that's all we have time for. So Romi, thank you very much for joining us. And best of luck with everything.
Thank you.
Great. Bye then.